To date, we've tokenized RWAs. There's somewhere in the realm of like 30 to 40 billion dollars. We have no sense of how much opportunity there is. It's in the trillions. Faster settlements, programmable compliance, and then also easier transferability. Yield is paid out actually on a daily basis, whereas typically with a lot of these funds, you have to wait much longer to get your earnings. The CUSIP of that stock that you hold, whether it's in your Charles Schwab account or Fidelity account or whatever your brokerage account might be, you have the same exact entitlements and rights as holding that tokenized version with Securitize on chain. Now more than ever, we're actually having to say no to some of these issuers. BUIDL, which is our tokenized money market fund with BlackRock, is now tradable on a decentralized exchange. And we've done this in partnership with BlackRock, in partnership with Uniswap.
Hello, welcome back to Odys podcast. My name is Aneta Samkov and we're meeting today at Consensus in Hong Kong. And I'm really excited for this conversation because our guest today is Ferguson from Securitize. He's the head of ecosystems at Securitize. Thank you so much for finding time for us.
Very happy to be here. Thanks for having me.
Awesome. So the topic for today is institutional tokenization. Graham, can you actually explain to our viewers what is institutional tokenization in practice?
Yes. So institutional tokenization, there's a lot that can be discussed when it comes to this.
Okay.
Just to give by way of background in terms of how we focus on things at Securitize. Okay. So Securitize is uniquely juxtaposed in between asset issuers and institutions that want to tokenize various types of assets. And then on the other side of our business is our distribution channels and our distribution partners. And so those vary from all sorts of DeFi protocols, lending markets, and different exchanges, all the way to centralized exchanges. And so for us, what it means to tokenize from the institutional perspective is figuring out ways of ascribing value and also taking assets, putting them onto blockchains where they can be much more easily accessed. Some of these advantages include faster settlements, programmable compliance, and then also easier transferability. And we do all of this in a highly regulated compliant capacity.
I see. Very interesting. So could you walk us through like a step-by-step how Securitize would tokenize something like private equity fund or real estate?
Yeah, so I'll use the example of our BlackRock BUIDL fund, which is the largest tokenized money market fund to date. So the way that we would tokenize a fund is we worked very closely with the asset issuer. In this case, it was BlackRock. So we're very close to the digital asset team over there, and have worked in lockstep with them. They are the biggest asset manager globally.
Yes.
And so it's very important that we do things entirely compliantly with them, right?
Yes.
And I think one of the big things that we've also had to focus on is figuring out, all right, how do we help them see the value in these types of products? And so I think one of the great advantages when it comes to, in particular, this product compared to traditional money market funds is that yield is paid out actually on a daily basis, whereas typically with a lot of these funds, you have to wait much longer to get your earnings, to get your APY. And so for us, it's about communicating the value to these funds and then establishing the issuance, the offering, figuring out where it's going to be accessible for these for investors. And then ultimately, like I said, just bringing utility and embedding these assets across the greater crypto ecosystem.
Compliance is a big deal in this space for sure. Do you see it rather shaping the product or being like a hurdle?
You know, I think it's honestly, historically, it was a bit more challenging. I think in crypto, a lot of firms are used to not having to adhere to certain rules. At Securitize, we're regulated as both a transfer agent and a broker-dealer. And so because of that, we don't really have to have a choice. We have to play by the rules. And so I think previously, like I said, it was a bit more of a challenge. But now what we're seeing, in particular due to regulatory clarity, no pun intended, in the United States, we are, I would say a lot of traditional crypto teams are embracing the regulatory nature of our products. And so before I would have said it was more of a hurdle, but now I feel like it's more of an advantage. And a lot of the smarter money coming into the space is investing in highly regulated compliant products.
I see. So from your experience, what institutions usually tend to underestimate when they consider tokenization?
I think it's the opportunity. I mean, it's
Really?
the global distribution of crypto is something that the industry has always excelled at. Being able to, that's one thing that I feel like crypto has done really well. And I come from more of the crypto native side of our industry prior to joining Securitize. And I think that's something that a lot of folks who originally got into crypto, they saw that as being the opportunity. And so when we talk about, being able to move assets around faster, being able to reach corners of the earth, being able to offer individuals products they might not ordinarily have access to just based on where they live. I feel like being able to enable global access to not only new and creative products, but also products that, perhaps in the US or in other jurisdictions we might take for granted. The distribution potential that crypto offers is something that's really attractive to institutions.
So when traditional assets like treasuries or funds move on chain, what other changes do you see in terms of liquidity, accessibility, operational efficiency?
Yeah, I mean, I think there's a lot of problems that need to be solved still. I think there's, what gets me really excited is there's tons of issuers, tons of asset managers that are interested in issuing tokenized versions of their products. And we have such a backlog at Securitize of these entities that want to tokenize all sorts of different things. But what we've struggled with to date is figuring out, all right, how do we ascribe utility to these assets? How do we need to think about who the end investor is, the end buyer is of these assets before we tokenize them. Otherwise, our issuers are going to be disappointed with the outcome.
Yes. So a lot of the tokenization is thought in terms of efficiency, like we just talked. But I was wondering if companies also think that tokenization may unlock new opportunities for financial products.
Absolutely. I mean, I think one way that I like to describe the opportunity in tokenization is, all right, we have these highly trusted assets that have proven to be successful in traditional finance, right? So take treasury bills, take private equity, right? And so these are investment opportunities that have earned a lot of folks a lot of money, right? But now what we need to do is take the opportunity in crypto, in DeFi in particular, and if we can offer folks additional earning opportunities to move their money on chain, then they're going to be way more inclined to do so, right? And that's outside of the technological advantages, right? We've talked about settlement, compliance, transferability, but being able to build financial incentive to get people to move their money on chain, that's what we're really focused on, because we believe that that is what's going to have the greatest impact in terms of money moving on chain going forward.
So are there any financial products that are available only on chain and not in TradFi?
Yeah, well, so that's what we're hoping to build. I mean, we're working with several of the largest lending markets in crypto. We recently launched with Aave Horizon. It's a permission version of the Aave protocol, which is one of the biggest money markets in crypto. So that's, very exciting product for us. And also something that's only accessible on chain, right? And so working with several crypto teams, crypto native teams to figure out ways of sourcing liquidity and building creative structured products that offer additional earning potential outside of what somebody might be earning off chain if they just held their funds in a traditional capacity. That's what we're really focused on.
Awesome. So what are the typical hurdles companies face when they're trying to move real assets on chain?
I think the biggest thing is just skepticism. I think it's
There's
changing.
Technology.
I think it's changing. I mean, what really opened up the floodgates for us was when we were able to land some of these big asset managers, right? And so if you can go to a company or an asset manager and say, hey, we're working with BlackRock, we're working with Apollo, we're working with KKR, some of the biggest firms globally, there's an instant sense of trust with us, right? And because we've been able to do this, because we've done things by the book, because we're highly regulated, compliant, et cetera, that's really helped us gain a ton of opportunity with a lot of asset managers.
Yes. Trust is a big issue because traditionally outside of crypto, the regular thought is that crypto is risky, right?
Right.
You always hear these headlines.
We have a difficult reputation at times.
Yeah.
Yes.
Is it still the case that it's really more dangerous than other investments? And there are like a couple of different types of risk. It's not only volatility, right? But also like a company risk, for example, or hacking.
Yeah, well, I think what's important to consider with our products is that since we are highly regulated in everything that we do, if you're holding one of Securitize's products on chain, regardless of what chain you're on, and we're integrated with about 15 chains now, so we're all over the place. The safety, I shouldn't say the safety, but for example, we've tokenized stocks, individual stocks before. The CUSIP of that stock that you hold, whether it's in your Charles Schwab account or Fidelity account or whatever your brokerage account might be, you have the same exact entitlements and rights as holding that tokenized version with Securitize on chain. And so because we're highly regulated, all of the same parameters and controls that are required by a transfer agent for safety and regulatory purposes, we've built that into our digital securities protocol, which is what is deployed when we say an integration. That's what's happening on chain. So all of the same safety parameters and everything that one would expect off chain, we've actually built in place on chain.
That changes the equation.
Yes.
So you mentioned a variety of chains. Do they matter? Like what?
It varies. I mean, we've had some asset managers suggest, one or multiple chains that they're more interested in. Generally, it's because they have a relationship or, in rare circumstances, maybe they're an investor. I think for us, we like to focus on where the flow of funds is generally. And so there's a lot of capital sitting on Ethereum. There's a lot of capital sitting on Solana. Solana tends to have a bit more of a retail base, whereas historically, the investors in our products have been a bit more institutional. So it kind of just depends on, the type of product that's being tokenized. And then, of course, if the funds have a particular lean one way or another, we'll work with them to figure out what makes the most sense.
So it's case by case basis.
Case by case, yeah.
So if like business is considering going on chain, can you mention like what are the benefits of going on the Ethereum versus Solana or any other chain?
Yeah, I mean, I think it's in the numbers, I would say generally. I mean, Solana compared to Ethereum, Solana's a faster, cheaper chain, right? Ethereum has more RWA capital that's sitting on chain, right? And then, I think if you look at several layer 2 blockchains, I mean, we're integrated with Arbitrum and Optimism and BNB, just to name a few. And there are scalability advantages and speed advantages to tokenizing funds on those particular blockchains. But generally we're agnostic based on the ones that we've integrated. I mean, every chain we work with has gone through our own diligence to make sure that we can deploy our protocol in a safe, compliant, regulatory friendly manner. So it's we are happy to offer suggestions, but it's really up to it's up to the issuer what they're most interested in.
It really makes sense to work with a partner like your company when considering tokenization, right?
Yeah, we like to think we have an idea of where to, where to direct teams if they're interested in tokenizing.
And experience already doing that. So going back to trust, is trust in crypto or DeFi built differently compared to traditional markets?
I think it depends. I think what's really unique about crypto is that so much of what we do is out in the open. It's open source. You can, if you a lot of the code is open source, like I said. So if somebody wants to go and build something, oftentimes it's just the code is out there available for them to do so. You can also, track transactions. You can see who's holding what asset at certain points in time, which does bring up additional privacy questions, right? Which are very, privacy is very important in TradFi. I think what's difficult about trust is that we, in our industry, we have a history of bad actors, right?
Yes.
And I think there, companies like Securitize and us working in lockstep with regulators. I mean, our CEO has spoken in front of Congress in the United States, and so there are things we can do as a company that is doing things by the book to showcase, hey, like it's not, we're not just a bunch of bad actors. Our industry is more than that. And I think what's really exciting is we're starting to see a tremendous embrace from traditional financial institutions by way of tokenizing their funds.
Yes, and I feel like brands have much stronger presence now, and a lot of founders and CEOs are not anonymous. They're coming out and becoming the faces of the company.
It's a good change.
yeah. That absolutely builds trust, right?
Yeah.
Awesome.
Absolutely.
Yeah. So this year is like really exciting in crypto.
Yeah.
I feel it throughout the conference that everybody's speaking about real world assets, and I think you yourself said that this is this is the year of RWA tokenization, right? Like, what signals that change, and what signs do you see at the moment that are different from the previous cycle?
A couple. I think number one, just the backlog of issuers that are interested in tokenization more broadly. I mean, we have tons of teams, and these are TradFi institutions that are interested in figuring out ways of building creative products and distributing their assets on blockchains, right? So, and this has been something that's been built over time, but now more than ever, we're actually having to say no to some of these issuers, right? Because we also want to make sure that we can figure out the best way to properly distribute this product. So I would say the backlog is one thing, but then also in just the last couple of days being here in Hong Kong, our industry historically has been so driven by market cycles, right? So we have ups, we have downs.
Absolutely.
We go sideways sometimes. And I think what's been really interesting about observing just the acceptance around tokenization is that I don't want to say tokenization is necessarily immune to market cycles, but I think what we're starting to see, and speaking from our vantage point in the US with regulatory, the progress that's being made there, I think it's the technology that's starting to stand out now, where it's like the improvements on settlement, the improvements in compliance controls, the improvements in ownership and transferability of these assets that we're tokenizing. A lot of institutions in the US are starting to explore tokenization. The major exchanges are as well. So I think they're starting to see value in the tech beyond just what happens, beyond just being a market-driven industry, if that makes sense.
Yes. So what needs to happen in the near future in order for the full-scale tokenization to take place?
It's a good question. I think what we need to do is figure out the utility component. I think historically that's been our bottleneck. I think it still continues to haunt us. I think making sure that we can figure out ways of building new and creative products that incentivize people to move their capital on chain is what our focus needs to be chiefly. We've seen tremendous interest in stablecoins. Stablecoins are a great example of a real world asset that's seen tremendous success, tremendous distribution. And so I think riding on the coattails of that and how we've been able to unlock utility for stablecoins in so many different ways, we need to do that with additional asset classes.
Okay, I see. And looking ahead into the future, a couple of years into the future, what do you see as the next major evolution in institutional tokenization?
I'm an optimist. I'm really excited to see how fast tokenization is accepted. I mean, I'm in New York, where we work closely with some of the largest institutions in the world. And this is something that everybody's talking about. I mean, I know it's easy to point to Larry Fink, BlackRock, right? I mean, he's always talking about this stuff. I think, the interest from these big institutions, it's bigger than it's ever been. And I think oftentimes with innovations like this, they take over a lot faster than anybody anticipates. I mean, I was reading, I know a lot of these, a lot of consulting firms have made predictions in terms of how much they anticipate will be tokenized by the year 2025 or 2030 or 2040. And I think, like, to date, we've tokenized in RWAs, there's somewhere in the realm of like $30 to $40 billion tokenized, depending on what you count, what you don't count. And TradFi, I mean, we have no sense of how much opportunity there is. It's in the trillions when it comes to TradFi, right? And so I think we have a long way to go. We're still very early, but I do anticipate that this is going to continue to take off like wildfire, as it already has.
So you see a lot of interest from just traditional financial institutions of Wall Street moving in that direction.
Yeah.
Wow, that's a big change.
Yes.
So what do you think, how does the mindset in this institution shift with respect to like cryptocurrencies?
I think I mean, we've talked about trust a lot. I think a lot of it has to do with trust. I think, we've been able to kind of, push through and get the embrace of these big institutions that are already associated with trust. And so by us sitting at that intersection of crypto and traditional finance, we're able to bring that trust into the crypto space. I can't speak for everybody in the crypto space, but I think the progress that we've made to bring trust to this industry is tremendous, and we're excited to continue to do that. I think it's only the beginning.
Awesome. So what are the opportunities for like regular investors right now?
So, to date, most of our products have been institutional in their focus, in terms of just there being a high barrier to entry. We are working with several local exchanges globally to figure out new types of creative products to launch with them, such as, anything from ETFs to stocks. I think it's really important to continue to develop products that individuals might not have access to. I think that's part of the ethos of crypto. I think that's one of the best things about our industry. And, for us, like I said, when we have this massive pipeline, this massive backlog of issuers that want to tokenize all sorts of different creative products with us. And so as we sort through those and figure out, what to tokenize next, while also solving the utility component on the distribution side of things, be on the lookout. You'll see a lot of announcements from us over the coming months. We're really excited to bring a lot of these new products to market.
What is like the exciting project you're working on right now?
So we actually announced one. Well, we announced one today. We announced an integration with Uniswap. So Uniswap is, for those that don't know, it's one of the biggest decentralized exchanges in all of crypto. It's one of the biggest names in the space. It's an original Ethereum protocol. It's been around for a long time. In the crypto space, it does have a lot of trust. And BlackRock has made an investment into Uniswap.
Okay.
And so that's part of the announcement. But the greater announcement is that BUIDL, which is our tokenized money market fund with BlackRock, is now tradable on a decentralized exchange. And we've done this in partnership with BlackRock, in partnership with Uniswap, and of course us, the tokenization platform. It's the first exchange of its kind to be able to transact using an asset like BUIDL that is regulated as a security. So
is it available on all the major platforms?
So it is available via Uniswap X, which is a permissioned version of the Uniswap exchange.
Okay. Do you have plans also to make it available on like large other exchanges?
Yeah, so we are. I mean, we're expanding all of our exchange and chain integrations. And so, the idea is to distribute these products globally. We're in the process of figuring out exactly what that will look like. But because we do things by the book, because we're highly regulated, we have to take things a bit slower than oftentimes folks are used to in the crypto space.
So you're in a lot of partnerships. How these come about? How do you select your partners?
It's a great question. I mean, I think it's a combination of factors. I think we focus on, I would say personally, I think two things come to mind. I think it's trust. I know we keep going back to trust, but we want to work with trustworthy partners that, we can count on. So that's one, major consideration. And I think on the other end of the other side of the coin is distribution. If we can figure out how to get these assets distributed, whether it's via new partners, new regions, new markets, that's a huge advantage for us. And so this particular product with Uniswap X, we previously haven't had secondary liquidity opportunities for BUIDL and in several of our other assets as well. And so what this will do is unlock that. It'll bring liquidity to these previously illiquid markets, which is another one of many problems that we're looking to solve.
Since you're working with so many financial institutions and you have such a big experience, I was wondering, like, are there any lessons from institutional tokenization that could be valuable for non-financial industries that are thinking about like digital ownership and like on-chain adoption?
I would say it takes time. Have patience. I think for context, I mean, for those of you that don't know, we have been around since 2017.
Oh,
so in crypto, that's a long time.
Yes,
that's 9 years, right?
Yes.
And I have tremendous respect for our founders who have been talking about tokenization long before it was a cool thing, right? I feel like now tokenization is a main theme in our industry. It's a main theme here at this conference, and I anticipate that it will continue to be for the remainder of this year and going into the future. But I think any sort of adoption of innovative tech takes a lot of time. It takes a lot of, you kind of just have to push through a lot of the difficulties. And especially when you're working with large institutions that are oftentimes risk averse, there's a lot of hand holding that needs to take place. And our team has done a really good job of that historically. So be patient. Change takes time when you're working with institutions.
So when a business wants to start, what are like the first steps you would recommend they do? How do you start moving on chain? Like if a business considers moving on chain, what are the first things they should do?
I think they need to figure out what their end goal is. I think, and not everything we've done has been a success. We've tokenized all sorts of things, and some have worked, some have not. And I think what I've seen that has caused issues when we've done this and it hasn't worked as well as we wanted it to in the past is that we don't work our way back from the end user. I think the end user, whether this applies to, outside of crypto, outside of tokenization, you have to work your way back from who's actually going to be interacting with the product. What is their experience going to be like? Is it easy? Does it make their lives easier? Is it something that they would be interested, that you would be interested in, right? So I think having the perspective of the end user is really, really important in figuring out what you want to achieve. And then from there, you can work back and figure out the type of offering, the issuance, all the legal compliance work that's imperative to making these products work. And that's how we are going forward with a lot of our partners today.
And in the long run, with a long horizon outlook, do you think tokenization is something that is inevitable or just an advantage?
I think it's totally inevitable. I think the amount of capital that's coming on chain, I think the amount of capital that will continue to come on chain, the embrace from the institutions, and these are the largest institutions in the world that are exploring this technology now. I think it's inevitable. I think we're going to see some drastic changes over the next, months into the next years. And I think it's going to reconstruct the fabric of traditional finance as we know it today.
Exciting. So the sooner the better. Also, thank you so much, Graham, for sharing all your insights. This is a really exciting time. So if you want to stay up to date, definitely follow Graham on his Twitter, X, and message him on LinkedIn and subscribe to our channel for more episodes like that.
Fantastic.
Thank you. Thank you so much.
Thank you.